Hey, what's going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live over on YouTube. As always, chat's open. So, questions, comments, stocks you want looked at, drop it in the chat and we'll get a look at it. But yeah, as we do every single week, we looking at everything that went on in the overall market, looking at the sectors, my specialized industry groups, and getting everybody ready to trade for the next opening bell. Without further ado, it's time for the Rapid Review. All right, there you guys go. Disclaimer, as you know, educational informational purposes only, not financial investment or trading advice. All right, so uptrend, current status. We are in uptrend. Sorry, trend overview, current status. We are in uptrend. Looking at my exposure levels, 80 to 100%. We'll talk about that as we go into the overall market and the indices as to why I am at that exposure level. The Webby trend, we are at a uptrend on the S&P, uptrend on the NASDAQ. My 50-day trend is a uptrend on the S&P, sideways still on the NASDAQ. We're 0.4% off all-time highs in the S&P and 1.7% off all-time highs on the NASDAQ. We have the official follow-through day 12 days ago over on the S&P, which was on the August 4th. And then I don't have it actually on here, but we basically had a follow-through date in spirit when you look at the NASDAQ also on August 4th. All right, and I see we got some questions. We want to look at crowd, and we got a couple other things. Looking at the index performance. So for the S&P, we were up 0.36% for their week. Nasdaq up 0.14%, Dow down 0.56%, Russell up 1.12%. For the year, S&P up 13.74%, Nasdaq up 15%, Dow up 11.8%, Russell up 23.63%. Closing range, Russell looking really strong, closing near the highs of the week. Nasdaq in the upper half of the week, S&P just squeaking by into the upper half, and the Dow closing in the lower half of the week. All right, moving averages. Above everything on the S&P, above everything on the NASDAQ. Excuse me. Dow, we are down below the 10-day. We just broke below that on the Dow, and the Russell above all moving averages. We're looking also, we see the 10, the 21, the 50, and the 200 all sitting in the proper order on the NASDAQ, as well as on the S&P, which is a good positive sign to see as well. Our distribution days. So currently at a 3 on both the S&P and on the NASDAQ. For the week, the NASDAQ did gain 1 day on Tuesday, 8/11. We had distribution day added there. And we lost the distribution day on both indexes. The NASDAQ lost to 7.7 due to time, and the S&P lost to 7.8 due to time. And that's what gets us at our 3. So net change, the S&P lost a day. NASDAQ was sitting break even in terms of net change. And going into what we should see for next week, we are actually going to see all 3 distribution days drop off on the S&P due to time. And then we're also going to see 2 of those distribution days on the NASDAQ drop off due to time. So based on time, by the end of next week, the only day we will be left with is the day we acquired this week. So naturally seeing a reset of distribution, having between the turnaround that the market's at as well as due to time. If we don't gain any distribution days, we'll be sitting at just 1 on the NASDAQ, which is very, very positive. And here you can see a distribution day calendar. Not seeing any clustering, just getting that little visualization that there has been little institutional selling signals coming into the overall market. All right, let's jump over. Let's start looking at what's going on with these indexes. As we always do, we'll start off on the NASDAQ. We'll start off on the daily. We'll take a zoom in over here. Let's get you guys started. So we ended off last week basically seeing some resistance right at those 514 highs. Something that was the second time we seen, or really third time in this area that we saw some resistance at those levels. Very, very expected the really strong movement that we had coming off the lows, and really normal behavior. Excuse me. Apologies. Really normal behavior to see that happen after that really, really strong move, and then coming near those prior highs where we had seen some resistance prior. Basically, what we saw throughout the week is just some tight normal action. We had 3 days of this week in the beginning, just kind of hovering around those all-time highs. We held above those gap up lows. We held above this kind of price range around the 26 260 range, which was all just kind of nice tight sideways action. We just kind of kept slowly tightening right across those highs. And then on Thursday, we got that big move intraday that we broke through the 514 highs, closed near those levels. And then on Friday, you could see kind of wish we saw some continued follow through those price levels going back towards these all-time highs over here. But we basically had an inside day, opened higher, went lower, held above the lows of the day, closed above that 514 price level. So getting a nice kind of constructive inside day as we held above those prior areas of resistance, and maybe we could start seeing this area flip from a area of resistance to an area of support as we try to work our way towards those all-time highs and hopefully continuation of the current trend that we are seeing. We got the 10, the 21, the 50, like I said, all sitting in the right orders. We got that moving average cross this week, which again is just, it doesn't necessarily mean anything in terms of like, oh, if this happens, this is a signal. But it is just kind of telling you what has been happening with the price action as we've seen the trend just slowly continue to keep trending upwards. So we'll eventually get all those moving averages sitting in proper order. So we're seeing that, which is a positive sign. In terms of volume, like we said, we did get that distribution day on Tuesday, but it is to note that it was a lower volume day. It just squeaked barely above the prior day. So really just qualified as a distribution day based on the rules, but I wouldn't consider that to be really truly a sign of institutional selling. Despite that, it did give the official rules to give us that. I think it's important to understand the context of the situation, looking at everything that's been going on in the market, and just know that like it wasn't really when you look at the market showing like, oh, this is a lot of institutional selling coming into the market. So a little asterisk next to that distribution day that we got over on Tuesday. But overall, if we're looking at just the volume profile of what's been going on, we've seen the volume really, really start to dry up. And then we saw a really, really good, nice volume come in as we started this uptrend and got that follow through day. And this is also another where that we had that follow through day right here on the 4th. The volume was technically lower than the prior 2 days. We just still see there's just some signs of big institutional money coming into the market right around that time frame. So again, follow through day in spirit, and this is where I think it's important to know your rules, but know why the rules are what they are, and be able to take things into consideration as to what's really going on when you're looking at things. And I think it becomes clear here to see that we're getting institutional buying coming into the market around here, right around that follow through day time frame. We're seeing volume continue to dry up right near the area of resistance, and we broke above it, and we're looking like we want to hang on and hold above that 514 high level. So everything looking very, very constructive over on the NASDAQ. And Thursday was that one kind of sign that I personally needed to start increasing some buying coming into the market, because we got above that area of resistance. You can see we kind of saw a little peak in volume, not a high volume day, but overall it looked like there was a little more buying power coming in here. And now also seeing that Friday, even though we wanted follow through day, we at least got some tightness and holding at those levels, which I think was also very constructive and very positive. So overall, this trend looks very, very healthy. The market is behaving as you would expect it after we got that follow through day and after things kind of started interacting with some previous price ranges. So very, very positive on what we're seeing right here. The S&P, very, very similar action. Only difference is that a lot of that tightness happening at all-time highs versus happening inside of this price range. Dow showing weakness, not a super, super big concern, given that most of the stocks that we tend to trade as momentum growth stock traders is going to be in the NASDAQ and the S&P. And then here we also have the Russell, again, looking very, very strong over there. So overall, if we're looking things, we really would like to, at the very least, hold above that follow through day and hold above the 50-day simple moving average. Looking at that on really both indexes. That's like our bottom line. But I think realistically, hopefully we can hold above the, this kind of price range around here in the S&P and hold above this 514 price range on the NASDAQ. And then continue to make our way higher. And then for the NASDAQ, we'll see how we interact when we get towards the June 2nd and June 1st highs. And the S&P will just see if we can kind of continuation of this trend because we are already at all-time highs. So yeah, like I said, real reason for the increase in exposure from what was like a 20 to 40% area was just basically seeing this tight range and this popping through that area of resistance. And some names starting to break out, some names starting to both perform well, granting the increase in exposure. Look at the weekly quick just so everybody can see it. And that's it. All right. We'll quickly talk about news. Going into next week, we will have some options expirations happening on Friday. And other than that, nothing else really going on. And then earnings season starting to fade out, but we still have the earnings you can see on the screen. These are meeting that criteria that you see that I just highlighted, but still some earnings, but slowly earnings starting to fade out. And I think that's a big thing too. We saw that some of that tight sideways action of the market right after that breakout also coincided with a ton of earnings happening. And I think that brought a lot of caution to the market as we knew that a lot of these big names and a lot of the names that many of us were watching were reporting. And the market kind of just sitting back to see how those reports kind of came out before continuing hopefully higher. So now that hopefully a lot of that is in the past, we'll start to see this market turn around and really get its legs going higher. Sector wise, you can see on the screen, energy sitting at the #1 ranked. Again, this is more of a longer term ranking, especially for your more position traders, but technology in #2. You can see that for the week, energy led out the week, then utilities, then we got communications, technology, consumer staples. So tech really starting to show its legs, like it is starting to want to turn around. Honestly, a lot of this I feel like is just better to look at these charts. So let's go over to Deepvue. And let's look at what's going on with our sectors. So if we're looking at Deepvue's sector rankings on the 3-month, you have financial and healthcare #1 and 2, technology in #3. I think this is a really good depiction of what we're seeing in terms of the sectors that in this current uptrend excuse me, guys, deserve like our most attention. Financials, healthcare, information technology. Those three areas really, really deserving, I think, most of our attention right now. So let's start out. Just go by the week. And as you guys know already, I apologize. I dozed off. I've had a crazy week with some home renovations, and I was waiting for this to start up, and I'm dozed off. That's also why I probably seem a little bit out of it, so I do apologize. But the show must go on. Let's see. There we go. Okay, 1 week. All right, energy. Um, So energy definitely deserves some of our attention as well. We had this kind of double bottom that's formed over here, and the market just breaking out on Friday out of that double bottom, especially after these 3 days tight right over here. So also on top of those three, financials, healthcare, and information technology, energy definitely being something that is worth our while. And what you will notice is does seem to be like we're getting some broad-based participation when it comes to a lot of these industry groups as well, which I think is actually very positive. So energy looking strong, breaking out, and looking like it wants to start really trending, hopefully make its way through those all-time highs and then keep trending higher. We have utilities being very weak, below the 200, not worth our note. Communications weak, not worth us paying too much attention. Technology looking very similar to like what we saw with the Nasdaq, but overall we're back above the 50. We're holding above the 50. We're seeing things starting to trend up the right hand side of this consolidation area, and hopefully want to break out and continue higher. So technology looking very, very strong. Consumer staples looking kind of just boring, right? Sideways. We did have the break here, back down, support the 50, just kind of trending sideways. Healthcare continuing to trend upwards, continuing to act normal and healthy, despite some of the chop that we had recently, and some resistance at the all-time high levels. Overall, healthcare behaving completely normal and trending upwards. Financials super, super strong. We got this little kind of, I don't know if you want to call this a little kind of pull back to the 10 consolidation right around this area. But overall, in the grand scheme of things, trending higher and looking good. Industrials, very, very similar, paused right below those all time highs. Real estate, not really nothing worth noting here. Materials. So materials was moving in this kind of sideways consolidation range. It broke pretty much through that, and then now it's pulled back and squatted right into that kind of price range again. But materials looking very, very strong as well. Like it wants to kind of, um, you know, kind of digest some of this movement and maybe break back up and hopefully get through all-time highs and keep trending upwards. So we're seeing this with a lot of the market. If it's not already through all-time highs, and towards the top ends of its consolidation like this, that it has kind of broken there and pulled back and squatted. So everything really looking just like the overall market that it wants to kind of continue higher. Consumer discretionary, nothing worth noting there. And we're back to energy. So really, it's almost like what is weak versus like, utilities, communications, those kind of cross off your list, consumer staples, you can even probably say real estate's looking okay. Consumer discretionary, everything else looking pretty healthy and normal, and that giving us, like I was talking about, a little more of that broad-based participation. All right, let's jump over now, and let's go through some sub-industry group stuff. All right, give that a second to load. So we're going to go to the short term because my long term, and this is something I've been playing around with for a while. I think I might add a midterm to this. This is a 3 to 12 month kind of ranking, as you guys can see here. Very good, I think, for the bigger, longer term position trading, for longer bull cycles or longer bear cycles, where this is going to really stand out. Short term being a lot quicker, very short 1 month time frame. Things are going to rotate very, very quickly. I want to now put in like a midterm kind of ranking system where I think that'll give us all three, and very often probably sit where I really personally want to see what's going in terms of relative strength. But still, the short term, I think, is definitely worth noting. If we're looking at it here, you see rare earth metals, defense drones, manned, unmanned, uh, kind of aviation stuff. So yeah, the drone stuff, defense technology looking really, really strong. Urban air motility. Then we got some of the materials looking strong. Space economy, LiDAR. You guys can kind of see some software and AI stuff as well going into the top 20. So that's what's kind of really stood out for me, is seeing a lot of the software, cybersecurity, drones, defense, still some healthcare floating in there as well. Um, really being where we're seeing a lot of the strength is in those spaces for sure. The material stuff, like I said, copper miners, gold miners, other stuff like that, looking super strong as well, and I think worth noting. So, you'll see when we go through what I own right now that this is where a lot of my portfolio is sitting based on where it seems we're showing a lot of that relative strength in the overall market. Yep, UAVs. All right. Leaders, we're looking at what led this week. So memory returning to some leadership here, and we'll look at some of those names, because some of them do look pretty good, even though they're prior leaders. Just because they were prior leaders doesn't necessarily mean they're going to lead again, doesn't mean that they're not going to lead again. And we'll look a little bit at what's going on with some of those names. And then you have some oil, gas, and stuff like that floating around here. And over on the right, you can see all of our 5-day losers. And then we'll look quickly at rapid movers. Very similar to the shorter term stuff, but this just shows where some of these groups are jumping in terms of rankings. LiDAR making a massive, massive jump. Some of this precious metals, software. We're starting to see some of these things make big jumps in the longer term ranking. Excuse me. Which is super positive. And then here we're seeing some of this stuff that's really getting crushed. So, all right. So let's jump back over to Deepvue. For those of you who don't know, I am a Deepvue partner. This is the tool that I use for all my stock screening, chart analysis, fundamental analysis. Really the best tool out there with the most amount of customization and information that is available for easily the best price point out there as well. If you guys are interested in checking it out, link in the description. You can click my link, and I got 12% off code for you guys too. So, all right. So currently looking at my portfolio, and this goes into, I know both Carl and Chad wanted to look at crowd, and the question Chad had was, "Hey Bobby, how about crowd? Give it more time, sell all partials because it's not performing." And then Carl had the same question as well. All right. So the thing you say, not performing. So a couple things to note here, right? Cloud, relative strength, 3-month, 6-month, 9-month, 12-month, all in the 90s. This is actually absolute strength if you're looking at Deepvue's numbers, which means compared to all the stocks in the database versus compared to the actual indexes. Now, 1 month, 67, not so great. That isn't always, especially in a market like this where we're seeing a little bit of like back and forth with what's leading each week, isn't entirely too concerning. This stood out when the market was really acting rough. This was acting healthy. While the market was breaking below the 50, this was holding the 50. This was a group that has been showing a lot of relative strength for a while now. So maybe in the short term, it's kind of broke and digested. But if you look at the move that it had off the 50, somewhat warranted. We just tested the 10-day simple moving average for the first time since that bottom at the late July area. So this is where I think it's important to understand, right? Like um, Chad said, it is not performing, right? It's the context of what's going on in this, right? You you can you're not going to always have explosive moves all the time like we had in like SanDisk and MU and names like that, especially when the market's not acting like that. Sometimes you're going to have a big move, a breakout, and then the market digesting and letting the moving averages catch up to it. This is completely acting normal. I would not say that this is not performing at all. This is completely acting normal. It's completely acting healthy. Just because, look, we had like, we had a 5% move to start the week, just because we were kind of flat for the week. And we rebounded higher and then pulled right back. Doesn't necessarily mean that this is not performing. I think even looking at the weekly, right? To say this is not performing when you look at a weekly, and it kind of looks ridiculous to say something like that, right? um, on the daily even. Like this is performing. It's just it had a flat week, which is completely normal and warranted. So when you feel like, oh, this isn't performing, think about the context of that situation. Not performing what in the last 3 days. That is not a reason to throw a stock out. That's not a reason to say, oh, okay, the trend's over. And it's kind of funny when people say certain things like, and Chad, I mean this with all due respect. And you know that. I know you from Discord. Um, when you have a stock like this, which has been holding up really, really well, breaking, trending, pausing, and coming into the 10-day simple moving average, people get concerned and say, "Oh, it's not performing." But we had Sandex starting to act wide and loose, and then break below the 50, and then rebound, and clearly not performing well. People have a bullish story for the stock. Um, so again, it's funny how I think people say, "Oh, it's performing well." It's they can find a bullish case for this, and then sometimes like this, you have a lot of people saying, "Oh, it's not performing well." Meanwhile, like look at the two side by side and look at what we're looking at. I'm kind of botching my explanation of that, but to summarize, look, I think depending on your trading style, if you're somebody that's shorter term swing trader, you bought down here. Maybe you're trimming into this possible resistance into the breakout, completely warranted. For your more true CANSLIM trader, for your more true position trader, or your even swing trader that's looking to ride the move, there is nothing wrong with this name. It is acting completely normal. And I think this is a big piece of a lot of it. Where did you get in? How big's your position? What's your stop loss? So when you ask, should we be giving it more time, sell it all, partial? It depends on where you entered. It depends on your trading style and depends on your rule set. To summarize it, if you are the shorter term swing trader and you feel like you sell into resistance or sell into strength right here and take some off the table, completely understand. For me, this is not a time to be taking anything off. It broke out. It's performing well. I have a cushion in a little bit of a cushion in this name, a couple percent. Um, I'm not even moving my stop up on this name right now because I know we could pull back to the 21 and then continue higher. So I'm not even moving my stop up on a name like this right now. And I just have to sit back and let this thing do its thing. If you try to get your top stops too tight, if you're constantly moving things up, if you're constantly trying to be just squeezing everything really, really tight, you are going to get stopped out of things that you are getting washed out for no reason that are actually acting completely normal. And this is something that's pretty cool with Deepvue right now. If you see this red line, this is the stop loss lines. So right now I just have it set at like 7%, just right around like my max stop loss I allow, a little bit, a 7 to 8%, but just giving me a visual. We could pull back into the 21 and basically be inside of 5%. and it'd still be acting completely normal, like if we were to pull back into the 21. So this is where I'm talking, like, you have to be a little flexible if you're going to ride some of these trends. And that's where I'm at right now. For me, it's the 21. That's where my stop is at now. It is a close below the 21, or my really, I would probably say that 7% loss from where we're at right now, which would be less than a 7% loss because I got a few percent cushion. But basically right below this day's low, which is also about 7% from where they are, breaking at 21. That's about where my line in the sand is right now. Because I know that this could do completely all the way to the 21 and be normal action. So yeah, that's what I got. So sorry, a little long-winded, but what else is new? You guys know me. UAVs. Hey Bobby. My question is how you surfaced UMAC. Okay. Two things. Number one, we're gonna do this. You guys know a friend mentioned UMAC to me a while back. Was one of the areas that I saw that. Screeners. My leading industries, I believe. Where are we? Well, I know. Hold on. I'm gonna go back. There. So UMAC was also in my leading industries. So that was one area stood out. Like I said, a friend mentioned it to me. You guys know I'm never gonna buy off anybody else's stock picks. It brought it to my attention, but like there's a lot of these names and all that have been talked about by one of my friends who's really heavy in the drone space. I haven't touched them, but when I saw this happening and I saw a lot of relative strength coming into the group, this is where it brought my attention to a lot of these names. So this my kind of industry group rankings, that was definitely one of them. I also have nope, wrong one. Sorry, bear with me. My relative strength screen. I wish I could. Oh, you know what? I can sort this easier. Why is this not sorting? Oh, there we go. Popped up in my relative strength. My relative strength screen. I believe it might have even popped up in my kind of doing a little deep diving into this too. Popped up in my fundamental screen. What else do we have it in? Did not pop up there. Relative strength fundamentals. So these two screens that got it in. I really thought it was in this one as well. Oh yeah, and it was in my leading industries as well. So popped up in 3 of my screeners, 3 out of 1, 2, 3, 4. Jesus, guys, sorry, I'm struggling. 1, 2, 3, 4, 5, 6. So 3 out of my 6 screens it popped up. It popped up in my sub industry group rankings in the very, very high up on the short term. That was the main areas where it popped up. And just like I'll do with any screening, I'm flipping through these names. And I am finding things that stood out. And to me, what stood out to this is really, really amazing triple digit sales. We had good earnings. We had a huge change in increase institutional sponsorship. A little higher of an ATR, which is always a concern, but also, normally that brings some really, really good moves. And then look at these ratings: composite rating 96, 94, 90, low on the EPS, but great 99 on the sales. Stage 2 uptrend. You look at this thing on the weekly, it looks great. Looks really, really strong on the weekly, coming out of this big, big consolidation area. And then we just had some really, really good tight action right around these days. And just consistently seeing like it was like wanting to act like the market and get above this high area. So when it broke those highs, I bought on what was it? I bought on Tuesday or Wednesday. A couple days I was buying coming through this price level right here. And then I was really liking how at this price level, I had the moving average not too far off either. So I kind of have it right around there too. So it was one of the best looking setups that I found in the drone space with the good fundamentals. And look, sometimes this is what happens. Sometimes I'm buying into a name and then all of a sudden I wake up the next day to see it up 25%. I really love the close. I love that we basically, we're getting almost a breakout we're right at those all-time high breakout levels. We saw a ton of volume pour into this name. So I could sit here and say, oh, this is, I knew because of XYZ, this was bound to have a massive, massive move. No, not at all. Not at all. It's just how it is sometimes. You produce these setups the same way. We got a SanDisk. Oops. Same way we got a SanDisk. These are all moved around on the follow through day, right? Same way we got a buy here, and then we got a massive move. Same, we have MU breakout, and then have a massive move. I could sit here and act like at the time I knew these were really, really strong names that were going to move. They just had all the pieces of the strategy, and that's what happens when you trade these names. When you follow the strategy, you're gonna find names and you're gonna buy things, and then they're gonna break out and take off sometimes. One of the examples I always use is Spotify back in 2020. I forget where it was, but I want to say like I think I was buying and like kind of here and here, something like this, and then we got like the Joe Rogan news and stuff, and this took off through here. It sometimes that's what happens, and sometimes it looks like you have insider information the way you're buying some of these names because you're following the strategy, you're following the breakouts, you're following the tightness, you're looking for relative strength, and it leads you to big names and to big winners. So hopefully that answers. What screen, what you look for, etc. Yeah, and again, it's following your strategy. That's what brought me to UMAC. Stark Market. Not sure what that means, Carl. I had a feeling it was your leading industry screen because I couldn't get it to show on any CANSLIM variations. All right. Sorry, spent a lot of time on this, but again, it is my leading industry, and that is huge for me, seeing something in my leading industry groups. But again, my fundamental screen, it popped up, and you guys can pause this, slowly copy what I have here. Just understand all, and then groups. Any of these, any of these, any of these, any of these, any of these. So basically, it has to have all this, and then has to have one in each of these groups. It showed up on that. And then relative strength, it was also on this group, and it showed up on this. All, any. So really though, when you look at this, the fundamental screen, you're getting CANSLIM characteristics out of this. This is just a wide casting net for CANSLIM, but like here, I'll explain the screen. My base core foundation, $15 more, not an ETF, above the 200, 50, 150, 200, all trending in the right order. Stand wine seed stage 2, and a good average dollar value. Base core, just looking for good quality stocks. Then I have relative strength, 3, 12, or 6 months above a 75, CANSLIM. Earnings, right? This is my earnings group. So I either want the average of the last 3 quarters to be 25%, the last quarter to be over 20%, the last 3 quarters to be accelerating, EPS rating to be above a 90, or if it doesn't have any earnings, at least have triple digit or greater sales. So this is how my earnings criteria kind of is. All different ways to look at earnings, casting a wide net, and if I don't have earnings, I have triple digit sales. That's how this screen's built. Then I have my sales, same kind of thing, just flipping it for, instead of earnings, looking at sales, average the last 3 quarters. If not that, maybe it has a good last reported quarter. If not that, maybe it's just 3 quarters of accelerating. If not that, maybe it's sales rating. If not that, okay. If it doesn't have sales, maybe it has triple digit earnings. That gives me my sales check. Then I got the same thing for annual and same thing for annual here. So basically this fundamental screen, what I'm essentially looking at is quarterly and annual earnings and sales. And the big caveat is if I don't have the sales, I have triple digit earnings. And if I don't have the earnings, I have triple digit sales. And that UMAC falls into that category. But really has, a lot of those things, earnings and sales. So definitely a CANSLIM name. And this is one of the reasons I cast a wider net. I rather manually go through 100 names. Then, right, here's my perfect CANSLIM screen. You can see that here. Have 22 names and not have some of these names pop up like UMAC. And this is where, yes, the CANSLIM criteria is what we're all looking for, but understanding having some flexibility. Because like when we look at UMAC, I believe it's ROE. Yeah, like it doesn't have ROE, right? Does this mean having not ROE, does that mean I don't want to pay attention to a name like this when it's a group that's showing a ton of relative strength? Look at that. 99, 98, 97, 97, 96. This stood out to me too. No, absolutely not. And that's why I cast these wider nets. And you guys know, sometimes looking through 400 stocks, 500 stocks, sometimes I'd say anywhere between 300 and like 600 stocks a weekend. And you guys have seen me do my routine. It could be very quick. Some of them I'm just quickly flipping through because they're extended or they're not looking strong. And then I rather do that and be able to identify UMAC versus have a very, very small screen like this and miss a lot of those names. And that's that kind of balancing act you play of casting a wide enough net to catch everything that you'd be interested in, but not too wide where you're wasting your time. And some people got to be different, right? Some people have to be much, much more tighter on their screens because they don't have the time to sit there and go through 500-600 names. And I get that. So just understand the balancing act you play on the casting of a wide net and then being super, super tight selective on your screens that you're only looking through a few names. Yeah, the sales rating was very impressive. Started a screen just looking at high sales ratings right now, especially when it comes to a lot of these tech names, specifically software. We've seen over the last few years how much the market rewards strong sales with, and not that UMAC does have earnings, but strong sales versus earnings. Annual earnings aren't that great, but we've seen the market reward that. So I think it's important to note too. I go through about 1,200 charts a day and still miss UMAC. Yeah. Look, and it takes a long time, and I constantly am tweaking my process. I'm constantly adjusting where I'm trying to you want to catch everything that you really want to see, but not catch too. It's like I said, it's a balancing act, and it takes a lot of time. And I think the question you have to ask yourself is like, This is how I do my screening. Do I have a way of identifying names that should stand out to me? So if we're looking at my weekend screens, the perfect is just very simple. It's like a perfect CANSLIM stock. Very easy, very simple. Code 33 is Minervini's. Very small, tight screen. But then from there, I have my white belts, which is my IPO stocks that have reported within the last year. That group of stocks is going to have a slightly different criteria, and I'm going to be willing to maybe look at different things a little differently because it's an IPO. So I have a screen designed for those IPO names that might not have earnings and sales yet, but still show a ton of relative strength or still have really, really good technical setups. That covers that bucket. Then I have my leading industry bucket, which is focusing on the industry groups, which the way I do this is I'll adjust my short term, long term, and I'm just extracting all the stocks from my own sub industry groups. So I'll come down here and I can extract all different ways my industry groups and the stocks in there. And then I just dump this into this. So this covers me looking at things from an industry group perspective. Then this covers me looking at things from a pure fundamental perspective. This covers me looking at a pure relative strength perspective. Now, if you had to ask, if I had to reduce everything down and look at a singular screen every week, if you told me, Bobby, you're crunched for time, you can only look at one list this week, what are you looking at? It's relative strength right here. It's this. It's these 300 names this week that I'm looking at. To me, look at this. I'm covering 12, 6, 3, and 1 month relative strength. If it has relative strength in one of those time frames and it is above a 90 and it is looking super strong and it meets this general criteria, so this is just filtering out crap, I consider this my catch-all. And I probably could just run this screen and likely be finding almost every single stock that I trade is on here. Maybe something I should study to see every time I buy something, is it on this list? And maybe that's it. Who knows? You guys might have helped me, you know, get rid of all my other screens. But I also like these in general in context, right? Having each of these as I go through that, I know I'm like, okay, this is my relative strength, this is my fundamentals. Sometimes on my fundamental screen, I'll find something that looks really, really good fundamentally, but just isn't the chart just isn't there yet. So there's a method to the madness. All right. Looks like a cup. Yep, definitely a cup. Hit 12,000. That may get mind numbing. So one of the things, and people have seen me go through my list, this is sometimes what it looks like when you're going through 1,200 names, or even me when I'm going through 400 or 500 names. Oh, what's going on there? And I'm just not actually looking at these, but okay, let me look a little deeper. Let me look a little deeper. Nope. Let me look here. Oh, what's going on? Okay, that's sometimes what it looks like. So when you're going through stocks, and this comes with time, you aren't going through it. We're spending 1-2 minutes on each chart, 3-4 minutes. I mean, sometimes you're spending seconds on a chart. And that's how you go through a lot of names very quickly, because what you're really looking at, right, is sometimes I could see something right off the bat being extended or being below moving average, like right here, right? Max linear comes up on a screen. This is how, ready? We're going to pass by. This is how quickly I'm going through max linear. Right? I'm spending a second because the minute I click on that, I'm going and below the 50. Maybe I'm reclaiming, but this is going to need a lot of time. And and this is the other thing, I kind of already know what's going on with the name. So things go faster as you get better at the technical analysis part too. Yeah, pass. Hello. And you know what's funny? You get like it becomes where you find that like the hellos smack you in the face sometimes. Where you're like screening, you're like, oh, what is going on here? Like that's what it looks like. So a lot of it is just with due time. A lot of it, and the way to make this easier for yourself is having that checklist up, and as you're going through, or even having a process. For me, it's the trend. I'm looking at the trend of the stock. All right. Um, let's go into the rest of my names. Okay, so we got crowd. Kai's going no my name in there. We got HPE. HPE and Dell falling into that same bucket of names that look very, very strong. Let's just read the chart. Dell and HP both showing a ton of relative strength. Both breaking, or HP breaking through this range down here, but starting to trend upwards. Dell breaking through, hopefully breaking out and staying in, hoping to get some legs and keep going. So two names in that space looking really, really strong, showing a lot of relative strength, performing well when the market wasn't. So those two names stood out. Again, we know UMAC, Fortinet, whatever you want to call it. This was trading really tight. This did kind of like, I was building into that more cybersecurity space here. So really have cyber, drone, that kind of tech hardware, data storage stuff here and here. I got stopped out of Dell quickly. I got stopped out of Dell many a times already. I think this is my third buy into Dell, but we're finally getting traction. So, and sometimes that's what it is. And if you have tighter stops, sometimes that's what you have to be able to do. Is you have to be able to rebuy something when it stands out. And you're gonna have, it's not all like the first, how to make money in stocks where everything looks super easy, clean, and just works, right? So that's a big piece of it, is understanding that if you're going to have tighter stops, you got to be a little more willing to re-enter. If you have wider or looser stops, you maybe don't have to constantly buy and sell and take as many small losses, but you have to also be willing to, A, have a smaller position so your equity risk per trade is smaller, or B, you realize you're going to have slightly bigger equity risk per trade because you're going to be giving a stock a little bit more room. So if you're putting that same position size on, you're gonna be risking more per trade. Where I like kind of like have a little bit maybe quicker of a tighter of a stop, I have to be willing to rebuy, but I can put a little bit bigger of a position because if it is wrong, it's a small risk. And then the stock has to reprove itself to get another buy. The only danger is you don't want to be, if you get something that's really choppy and really, really bouncing around, you can get a multiple stop outs and then end up with a bigger percent loss because you're just getting those death by 1,000 cuts or death by multiple cut type things. So keep that all in mind. And it's a balancing act. Again, this is why there's no black and white. There's no holy grail. There's pros and cons to both. And things are going to work better in other environments, than other things. Back in though, no ego. That's just how the ocean works. Yeah, 100%. Exactly. All right, let's go. I forgot over on Discord. I screenshotted it. You want to take a look at APH. I believe this was on one of my lists. It was. This looks beautiful. Beautiful. This chart. Look at that. shake out through here, quick back up, back above the 50 here, sloping downwards, volume drying up. I mean, this just looks like a perfect cup with handle right now. Doesn't get much better than that. So, good prior uptrend, 22% base, right up the right hand side, pullback, volume lightning, perfect cup with handle. There's a reason this is on my spotlight list. Yeah, I love it. GNK. So with this one, a little more choppy, a little more sideways. But I overall this is behaving well. I don't like it. It seems to get a little more erratic here on the right hand side over here. I would like to see this get a little tighter near those highs. I would like to see this trend upwards, or maybe you're buying this off support on the bottom. Again, my big question is, do you feel this is the best of the best out there? If you do, great. I don't. Look at the relative strength or absolute strength. It just doesn't scream best of the best to me. So I can see what you're looking at, but you look at APH, and I know that the relative strength here isn't as good, and probably why I have bought and missed and invested in other names. But this just looks so perfect. Where this looks okay. The chart. It's a little more choppy, a little more sideways, where APH is just so nice and uniform and clean. And I like clean, easy, good trending charts where things are easier to read. When things start to get a little choppier, the support and resistance areas get a little more faded. NWG, I am going to guess. Yeah, NWG was acquired. Oh, I could have did this in my Deepvue terminal too. Could have did that in here too. It's not bought out. Let's see what it says. What does this say? Yeah, so returning to private ownership. Okay. See, get the same answer there. But that's also why you're getting this tight action. So this is off the list for that purpose. But yeah, of all the three, APH, GNK, and NWG, I love APH. The other two, not on the top of my list. And again, I've said this a couple times, and I'm really starting to really say it more often, is like, do I feel this is the best of the best merchandise out there? I can only buy so many names. Do I think that this name is in, because the max I'm probably ever going to hold is like 10 names. Most of the time I'm holding between 4 and 6, maybe 4 and 7. Do I feel, let's just use the round number of 10, do I feel that this stock is in the top 10, is the top 10, one of the top 10 stocks in the whole market, thousands and thousands of names? If it is not, then why do I want to own it? That's the question that I ask myself. And I suggest you ask yourself that too, everybody. Let's see. I gotta clean these lists up. So this does not need to be on here. This does not need to be on here. This does not need to be on here. And then I'm gonna let's look at some of these names on here. I really love this blaze. Right? I love this big gap up. I like this moving sideways and holding this price range. So this really does stand out to me. Am I looking to enter on something like this? No, now? Absolutely not. But it is starting to look appetizing because of how tight it's trading. The gap up, the hold of these lows could present a really, really low risk entry. I think this needs more time to digest what's going on. Right here, you're just kind of buying at that support level. How long does this go sideways before it gets some legs? So I would like to see this continue to go sideways, or maybe pull up, pause, pull back down, something along those lines. But this really stands out to me. Twilio, another name that kind of gapped up on earnings and has kind of been holding in between those highs. That's standing out for me as well. I am fully invested. One account, I am slightly on margin. Very, 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 very slightly on margin. What else do we have in here? This is gone. This broke out, and tap looks really good. Net broke out, net looks really good. Love this sphere. Love how this is acting. The breakout. Maybe we'll get a squat, more of a handle formation. Really look how clean and uniform that chart is. So I would love to see us pull back, see the moving average tighten up. If that would be like absolutely ideal. So it's basically a cup with handle, but I like a high handle where it's more of like a squat back into the base. Okada, another one looking really good. So a lot of names on here. Frog, I would like to see get tight up here. Viking getting crushed. And Credo. I really like Credo. I just like to see this ideally get to like right around here, and then which it kind of did, and now maybe get tight and go sideways and form like a little mini cup inside of the space. But I really love how Credo looks too. All right. Let's see what other names we have floating around. I got to clean these lists up. Let's look at Palantir because I know people talking about that one. Hey, we're back above the 200. I love it. Do I want to buy something like this now? No. Look at NVIDIA. Let's look at some of these popular names. NVIDIA looking good. NVIDIA looking strong. It's going up the right-hand side of the base. AMD. Well, actually. And really, NVIDIA getting through this area is what really makes it look nice. AMD looking super weak. Super weak. An account that I did not set up for my son. My son does own it, and I do not like the idea of how weak this is, but I don't control that account. Part of me sees this as and I've been duped on this one before, shorting AMD. But yeah, this has really has the idea that this thing is looking to top and roll over. We'll see. It's proved me wrong before. It has proved me wrong before. But I don't like the way AMD looks. Let's look at Tesla. This thing's been a dog. Definitely a dog. We'll look at SanDisk. I said I would bring these up. Yeah, look, I love the relative strength, man. I love it. I love the turnaround. I love the bottoming. But guess what? We're right into that 50, man. Right into that 50. I don't have a perfect shorting approach to the market like this, but this has, to me, sure looks like a primed up short. I don't really do it, and I don't know it well. Same thing with MU, but these names look like they are priming for some sort of short action, especially MU, man. So, again, I don't have a great practice and study of shorting, so I could be completely wrong here. Don't listen to me when it comes to this, but my gut is telling me these are fairly good shorting type of setups right now, where again, somebody who does this a little bit more can probably dissect this and tell me why it is or isn't a good looking shorting type chart, but that's just my 2 cents. All right. That's all we got. All right, let's close it all out. Apologizes for today. I dozed off. Apologizes for getting this in at the end of the week. Just a lot of craziness going on in the house right now. The kitchen renovation. But yeah, the market is looking really strong. I think it is to note, like, it is not the same market we had in April, where it was names took off and just left without us. And there is day to day, strength. Oh, cyber looks good today. Cyber looks poor today. Guess looks good today. Guess looks poor today. Um, Different rotation day by day with the groups and what's your strength. But I think overall we're seeing some broad-based strength across the market, which is positive. And I think overall, like when you take a step back and look at a lot of these charts, they're behaving well. They're acting healthy. They're trending upwards. And as trend following momentum style traders, that's what we want to see. And I think that it's good to remind yourself of that. Like, your entry tactic and your stop losses are there to protect you and to get you in. But the main goal is riding that trend. And I think most of these names are trending well. Most of these names are acting healthy. And I think overall things are looking constructive. So, um, as of right now, I think it's just a matter of continuing to look at what's got good relative strength, continuing to look at what looks like leadership, not get too ingrained in the day-to-day relative strength, the day-to-day leadership, even sometimes the week by week. When I look at the names that I own, right? When I look at Crowd, I look at Dell, when I look at UMAC, like these names have been showing relative strength now for a while, and specifically showing relative strength when the market was looking weak. That is what stands out the most to me. Crowd, HPE, Dell, UMAC, Fortinet. It's in the grand scheme of things, from the market kind of hitting a resist, like choppiness starting in, like, let's say mid-May to the beginning of June to now, they have been showing relative strength. And that is what is leading my attention to those names. The choppiness over the last maybe week or so, the lack of just thrust that we saw, like we did back in April, where names break and they just take off and they run, isn't something that's concerning to me. And it's funny because when we get those breakout moves, people call it a lockout rally. People get frustrated. Oh, these things never digested the big move off the bottom, and it was hard to get in these names. Now names are digesting. Now names are moving a little slower. Now names are hitting resistance and pulling back and getting tighter entries. And now people are complaining about that. So it's like, you complain when the names take off and they rip and they get legs too quick and they get extended very quick. People complain when the market is moving a little slower and more methodical and up and down intraday chop, where if you're really, really tight stops, you're getting stopped out. You have to buy back, you get stopped out. You can't have everything, and that is actually a case for it, right? For the person who can use a really, really tight stop, when the market's explosive, it's easy. When the market is a little more choppy but still trending upwards, it could be a little bit more difficult. So this is why I say there's no holy grail. Different markets, different environments there's going to be different struggles that different people have based on their strategy. So, but overall, I think we have a nice broad-based move. The market is looking very healthy. It's behaving normal. It's trending upwards. We're seeing the leading names and the leading groups behaving normal, acting normal. What more do you want? You know? And could this market be hitting resistance and we roll over? Absolutely. Could happen at any time. And that's why we do what we do, and we prepare every single day so that when the opening bell hits, we know what we're going to do. And when the market goes in either direction, or even if it's sideways, we're prepared. So, but yes, overall things look healthy. Do I think you should be on margin as I am in one account? I'm being a little bit aggressive for sure. And some of these names have tracked in. Almost every single stock I own is in the green except Fortinet. So I'm not too concerned about it. And I just do little ads here and there just to increase some exposure. And it's very, very little amount of margin. But overall, do I think you could be in that 80 to 100% invested? 100%. Absolutely. Just make sure, as I said before, you feel that you are buying the best of the best names. You're not chasing, you're not just putting on exposure to put on exposure, and everything you're doing falls within the confines of the rules that you have as a trader. All right. That's all I got. YouTube, X. I need to update the link in the description for Discord. I realized that, so sorry about that. But just reach out to me, shoot me a email, throw it in the comments, and I'll reply to you if you are interested in checking out Discord. Again, sorry guys. Like I said, crazy week. I was all set up for 10 o'clock, and then I fell asleep. And my wife woke me up. She's like, "Hey, it's after 10. I thought you were live streaming." I'm like, "Oh." So I woke up and got on here. Um, so appreciate you guys always bearing with me in the chaos, which is my life. But I love this stuff. I always enjoy spending some time with you guys. I always enjoy uh, getting the opportunity to answer questions and to go everything with everybody. And yeah, thank you. Appreciate it. Like, comment, and subscribe. I never say that, and I was told I should say that. So, if you made it this far and you're not subscribed, subscribe. And if you made it this far and you're still watching, whether it is the live stream or you're watching the recording of this, do me a favor, drop a comment. Let me know what you think of everything. Show me some love and hit the like so that the YouTube algorithm likes us, so that this chat could get packed out with people and we could have tons and tons of stocks and tons of questions, and I can go on tons and tons of rants. And this way I can be getting all the stuff that's up here out into the world, hopefully helping some people. So